Hello traders, Doc here. In this video I'm going to talk about risk-reward ratio and some other important things in order to become profitable trader. It is very crucial to understand the importance of risk-reward ratio and risk management. First, let's explain what is risk-reward ratio or risk-reward. The risk-reward is simply a calculation of how much are you willing to risk in a trade versus how much you plan to aim for a profit target. Here you can see how to calculate risk-reward ratio. Once you choose your take profit level and your stop loss level, you need to divide these two levels and then you will see your risk reward. So this green color represents take profit area and red color represents stop loss area. So in this example, I decided to aim for 20 pips and I also chose 20 pips for my stop loss level. This means that I need to divide my take profit pips, which is 20 pips, with my stop loss pips, which is 20 pips also. So when you divide this, you get 1. So what is your risk reward ratio? It is 1 to 1. What that means? It means that you risk 1 to get 1. So basically you risk 20 pips to gain 20 pips. When you divide 20 by 20, you get 1. At this example, I decided to aim for 40 pips. So this time we need to divide 40 pips by 20 pips. When you divide 40 by 20, you get 2. So in this example, your risk reward is 1 to 2. 40 is 2 times larger than 20. And that's why your risk reward is 1 to 2. And this is the final example where we decided to aim for 60 pips and risk also 20. So what that means, we divide 60 pips by 20 pips. And when you divide this, you get 3. 60 is 3 times larger than 20, and that's why your risk reward is 1 to 3. In my experience, I advise you to focus on 1 to 2 risk reward. You can also focus on a higher risk reward ratio, but it takes more time for price to hit your take profit, and sometimes that is very frustrating to wait for that and to be patient enough to wait for the price to reach your full take profit. Risk reward 1 to 1 demands much higher win ratio to be profitable. So risk reward below 1 to 1 is just a bad idea and don't do that. So what I mean when I say win ratio? So if you take 10 trades and you win 6 trades, that means that your profitability or win ratio is 60%. Here I made this table to show you what risk reward you need in order to become profitable based on your win ratio. Here this red color represents zones where you will not be profitable, and blue, they represent zones where you will be profitable. Well, simply said, if your risk ratio is 40% and you use 1 to 1 risk reward, that means that you will not be profitable on a long run. Also, if your win ratio is 30% and you use 1-2 risk reward, that also means that you will not be profitable on a long run. But if you have just 50% win ratio and you use 1-2 risk reward, that means that you will be profitable. So all these blue zones, they represent profitability. Here you can clearly see if you have lower win ratio, you need a higher risk reward. Personally, I aim for a 50% and 60% win ratio, and also I use risk reward between 1-2 and 1-3. So if I'm able to achieve this win ratio, on a long run I will be profitable. Let me know what is your favorite risk reward down in the comment section. So now let's explain this on a real chart. At this example, I will show you how you can become profitable even with a 50% win ratio. So what is the key here? In this example, I decided to risk 20 pips for every single trade. Of course, you will not always risk exact the same amount. So sometimes you will risk 25, sometimes you will risk 18 pips. But here I decided to go with example of a 20 pips risk. So let's say that this is the first trade that we took. We risked 20 pips in order to gain 40 pips. That means that our risk reward is 1 to 2. And this time we won. So now we have one winning trade. Then price went up. We saw this double top. We decided to sell, but price went up, stopped us out. So we lost. Now we have one losing trade. So now we have one winning trade, which is 40 pips, and one losing trade, which is 20 pips. Then price continued to go up. We saw this massive bullish candlestick. We decided to buy with a risk reward 1 to 2. Price ended up reaching our take profit and we won again. So now we have another winning trade, which means that we won another 40 pips. Then price continued to go up. We decided to buy again, but unfortunately price reversed and we lost. So now we have another losing trade, which means that we lost 20 pips. Price then went down. We decided to sell after this support break, but the price formed a bullish move and stopped us out. So now we have another losing trade. And finally, price formed this bearish pressure. We decided to sell and we won, but this time we aimed for 60 pips, which means that our risk reward now is 1-3 and we won 60 pips. So now when we calculate this, we lost 60 pips, but we won 140 pips. That means that at the end, we ended with 80 pips in profit. Okay, 140 minus 60 is 80. So even with a 50% win ratio, we managed to be profitable. So we took 6 trades, but we lost 3 and we won 3. But because of a good risk reward that we used, we ended in profit. Some mistakes the traders make is they use bad risk reward. In this example here, you can see that the risk is much higher than a potential profits. Here we can see that price reached our take profit and we won this trade. But next time when we do this and price goes on an opposite direction, we will have a massive loss. And here you can see that we decided to enter here and use much higher stop loss than a take profit, which is a bad idea. And price didn't go down, it actually went up and we had this massive loss. So we can say that we won here, yes, that is true, but we lost here and we lost much more than we gained here. So overall, we lost pips. See, here we gained 37 pips, but here we lost 94 pips. On a long run, if you use bad risk reward or lower than 1 to 1, there is no chance that you will be profitable. Unless you have win ratio 100% or 90%, which is not very realistic. Also, one mistake the traders make, they use too narrow stop loss. Basically, they don't give a price space to move. In one sudden spike, it can stop them out. This looks nice when you have a low risk and high reward, but on a long run it can be very frustrating because chances to lose are much higher because you're using a low or too narrow stop loss, and in order to have one profitable trade you will lose many of them, and that can be very frustrating when you lose 1, 3, 4, 5 trades in a row, and it will be very hard to recover. Let's look at this example now. Our overall guess was correct, price went up, but because we decided to use such a narrow stop loss, price stopped us out. So yes, I know that this looks good, but on a long run it's very hard to maintain this, so I do not recommend you to do this. It is also very important to know how many pips do you want to choose in your stop loss. This also depends on which type of trader you are. If you are a swing trader or day trader, you need to use a little higher stop loss. For example, I am a day trader and I use around 20 pips, 25, sometimes 30, sometimes less, like 18. This depends on a currency pair that you're trading. For example, it's hard to be a day trader and have a stop loss of just 5 or 10 pips. See how narrow this stop loss is, and just a minor spike or reaction to the news will stop you out. So if you want to risk 5 to 10 pips or even less, then you need to scale down on a much lower time frame and analyze 1 or 2 minute time frame. But if you want to analyze 1 hour time frame, then it's much better to use a higher stop loss like 20, 25, 30 pips. But if you don't have time to check charts often and you're a swing trader, then you can use a higher stop loss like 60, 80 pips. Of course, this depends on a pair, but this is just a general rule that you should follow. It is also very important to have realistic expectations. Don't expect to win every trade. And don't expect to win high pips every single time, to win, another win. Don't expect this. Just follow your rules. Decide how many pips you want to trade. Choose a certain range. Let's say I'm a day trader and I'm risking 20 to 30 pips per trade. And I aim for 40 to 60 pips per trade. So let's say that this is your rule and now you need to follow this. So every time you take a trade, you risk 20 to 30 in order to gain 40 to 60. And sometimes, of course, you will lose. Sometimes you will exit at break even, but sometimes you will win. And on a long run, your chances to become profitable are much higher if you have a proper risk reward and risk management. This is one very important lesson that you need to understand, because even if you have good analysis with a bad risk reward or bad stop loss placement, you can lose. It is crucial to understand everything that I said today in order to become profitable on a long run. If you have any questions, please comment below, ask me anything that you want, and also please consider liking and subscribing this video so I can continue to make more videos like this. Thank you very much and see you in the next video. Bye bye.